Hello, good afternoon. You're watching Closing Trades on 80 now, and the closing trades are looking all right. The Nifty continues to be in a very narrow band. Yes, it made its dash towards 22,600, but could not sustain those levels. So there's a definite hurdle at 22,600, and we have been fairly sideways throughout the trading session in a narrow band. Bank Nifty, that is the one which is underperforming quite sharply today. Call it the impact of the weekly options expiry or the fact that there was a bout of outperformance from the Bank Nifty in the few days earlier. There is a bit of an underperformance today. Defensive, they are doing well in the trading session. So whether it's FMCG, the likes of HUL, ITC, etc., or IT companies like TCS and Coforge, they are performing better than the rest of the market and other sectors. PSUs, they continue to do quite well, especially the defense names. So Bharat Dynamics, Earth Movers, as well as Hindustan Aeronautics, all of these stocks have climbed on further gains of anywhere between 3 to 8%. So quite a bit of good traction, at least in the mid-cap index, though small cap is a bit skittish again. That one is underperforming.
Yeah, that it sure is. Let's just mark some of the other laggards from within the broader end of the market. And BHL surely, started off gap down, got covered a bit, recovered half of its losses, was down about 3% at the high point of the day. And once again, that stock is getting slammed, down by about over 6% on the futures as we speak right now. Bharat Forge, SAIL, NMDC, IEX, these are some of the other names which are seeing some red come by. Metropolis got a thumbs up after its earnings. That stock is holding higher by over 3.5%. PI Industries, Cipla, Coforge and Granules are some of the other names which are looking very smart indeed. Also seeing some earnings reaction for Strides Pharma, wherein the FY25 guidance is something that the street is taking cognizance of. The fact that they've talked about the capex of 150 to 200 odd crore rupees is going to continue, and they see the US business revenue in the range of about 285 to 300 million odd dollars. Gulf Oil also came out with its numbers. That's another stock which is in focus as we speak right now. The management indicated that they managed to grow 2x than the industry growth rate, and that's pretty sustainable, and that they will continue to have double-digit revenue targets going forward as well. JK Tyres also came out with its numbers, and that also is one stock which has been in focus. In fact, the entire sector has been in focus. Apollo Tyres making some very good moves of late, and we should just bring up the intraday graph of JK Tyres as well. Those, of course, are the numbers. They are seeing the tyre industry grow at about 6 to 7% in FY25. That stock is well looking smart as we speak right now. But let's welcome on board our experts, Andrew Holland, Kunal Bothra, Naresh Mirani, and then figure out where the market is headed. Kunal, what's the take on the index? Because it's an even narrower session than what we had yesterday.
Well, yeah, narrower session, but the Bank Nifty is underperforming, and I think we are now back again below that 48,000 mark for the Bank Nifty, where we've been protecting this level for at least the last 1 to 2 trading sessions for the index, which means that we could now be drawing back into the previous supports for Bank Nifty, which is around the 47,250 to 47,500 levels. I think today's day is more to do with the benchmark Nifty consolidating yet again around this 22,500, 600 levels. And the good part is that we are seeing some beaten down sectors making a comeback for themselves. The likes of FMCG, for example, is looking quite strong. You're seeing some recovery or some shades of recovery coming back into the IT stocks, the likes of Tech, Mahindra, etc. So I would probably believe that it's a very stock specific kind of a market. Nothing major cues in terms of sectors, which could probably be the next trending sectors going forward.
Point taken, Naresh. But what's your take on Reliance? That's one outlier today. It's up almost 2%, contributing almost 50 points on the upside. And on the other hand, ICICI Bank and SBI are a bit of a drag. What will be the recommendation on these three specific names?
So Reliance Industries is something which I continue to like and have been recommending. And if you look at the charts, it's poised very interestingly at current levels. So in the month of April, it made 4 or 5 tops around 2950 to 2980. The previous all-time high is around 3024, adjusting it for Geo. So 3000 to 2950 is a stiff resistance. We've come very close to it now at 2920, 30 levels. And today is a day where it is coming back to those levels. And last time we saw a big cut happen in 3 sessions was from this 2950 mark. So if it sustains 2950, it ideally opens up a target price of 3200 to 3400 levels. So that is the possibility going forward, and Reliance being one of the largest weights or in the top 2 weights of the index can propel it. So even today, out of the 40-50 points on the Nifty, majority is being contributed by Reliance Industries. So positive on the stock. On the banking side, we are not seeing follow-up price action. So we've seen ICICI Bank keep coming back to that 1140 mark, goes back to 1100. That's been the tight range. SBI almost made a new all-time high yesterday, and again has seen a pause today. So the bias is positive. The momentum is yet not great in the banking side. So waiting for further momentum to come up, but the bias remains positive on ICICI SBI.
Right. Andrew, hi, afternoon. You think it's a pre-election event quietness on the markets?
We seem to be in this range, which everyone's been talking about. But interestingly, I've noticed that some of the, you mentioned defense stocks before starting to move, and I've noticed with construction companies as well. So I think there's a feeling that, once the elections is through, that what you're going to see is a whole bunch of ordering over the 3 months afterwards, whether it's for defense contracts or construction contracts. And of course, all of these share prices move on the basis that they get new orders. So, that's why I think these sectors are starting to pick up again. And of course, a few weeks ago, there were some worries about the voter turnout. That's kind of less of a problem for the market at the moment. So everyone's going to concentrate on what after. And of course, you are going to see a lot of construction contracts being given out after the elections.
Point taken. So that's a view on defense and industrials in some of these public sector entities, Andrew. But what do you think will change the market mood regarding private banking names? Because earnings-wise, it's not been a very big disappointment as such, but the stocks just fail to move.
Yeah, I think it's a case of FII selling and using the banking sector as a very liquid and large overweight to neutral stance, which they had, to fund some of their moves into China, which we've been seeing over the past month and a half. So I think that the banking sector, given its weightage, just falls under that problem of being used as funds for other markets. So. I agree with you. I don't think there's anything wrong with the results season so far. And if anything, once the bank sector starts to move, there's going to be a lot of short covering and a lot of buying to make up to some of the positions which have been lessened over the last month and a half particularly by foreign investors.
Situation, would you recommend the retail audience out there to perhaps start adding the private banking names? Because as you're saying, when it does move, it might move with quite a bit of ferocity.
Yeah, no, I think the banking sector is the place to be. If you believe the economy is going to continue to grow very strongly, the banking sector would have to perform. Listen, the banking sector started to perform after the results, and then of course you had some regulatory moves, towards Kotak Bank, and then obviously, about project financing, which just kind of dampened the sentiment a little bit for banking. But the results season so far is showing me that the NIMS compression is pulled behind us, and that's great news for the profitability of the banks going forward.
Andrew, what is it that you're making of this entire cap goods and energy play? I mean, we saw earnings from both BHEL as well as BEL and quite the polar opposites, but it's a different story that the stock pattern may have been pretty much the same. Do you think it's time to get a little cautious here?
See, at the end of the day, for whether it's, infrastructure stocks, renewable energy, it's all about execution. And it's those that can execute those orders profitably, will continue to do well. What tends to happen is that share prices move on the order book being, increased. And I think that will be the benefit. They'll still remain beneficiaries of that. But when you come down to the end of the day, is it falling through to the bottom line? That there's still question marks over that for some of these companies, which is why, when we look at the kind of infra play, we're probably more towards the kind of, the more specialized areas, where Siemens and say ABBs operate, which is smart cities, smart manufacturing, which is better margins, and obviously, better execution as well.
Okay, point taken. But since we're on the subject of BHEL as well as BEL, let's take it across to Junaid to find out what was the brokerage commentary and what the management has to say about that.
results were on the owing to flat execution and working capital, making the company net debt company. The miss on EBITDA was due to the higher risk, which was not for the support of provision write-backs. For FY 2024, the margins fell around 60 bps. The management said that this should be bottoming out from now on. And if we talk about the cash flows, analysts say that this reflects the real situation in here. 3,900 crores of negative free cash flow has led the company for a net position of around 2,600 crores. The future of the company's net thermal business looks bleak beyond FY30. The analyst says that the old legacy project shows sign of execution pickup and is expected to perform better by the end of FY 2025. Now moving on to BEL, the company reported the revenue of around, the company is trying to target a revenue growth of around 15% for FY 2025. The management also said that the EBITDA margins for FY 25 will be in the range of around 23 to 25%. The focus for FY 2025 is in improving operating efficiency going ahead. They're expecting the total order book of around 25,000 crores in FY 2025, excluding the QRSAM order book. For export revenues, they are targeting $110 million for FY 2025, with adding another $200 million from export markets. Now, if we talk about the capex and expansion plans, they will be doing around 600 to 700 crores expansion per year. And they are also building a super component facility in Hyderabad, starting up with an investment of around 130 crores.
Received orders of 9.6 gigawatt last year from our power sector division, totaling to around 52,000 crore rupees. All these thermal sets are of 800 megawatt rating. Our industry sector segment also witnessed the highest ever order book inflow of 22,000 crore rupees. With the above, we recorded BHEL's highest ever order book of around 78,000 crore rupees in FY 23-24. If we see the last previous year, it is 70-30 ratio, 65% or 65-70% is from power sector and balance is from industry sector. And our perspective is we want to go for 50-50%, 50% from the power sector, 50% from the industry sector. And from industry sector, as our main areas will be transmission, transportation, defense. These will be the three major areas. As far as capacity addition is concerned, around 10 gigawatt capacity addition we will be doing. And exactly means we cannot say what will be the revenue guidance, but definitely we are targeting some 12 to 15% of CAGR year on year.
Okay, on that note, we're going to take a very quick break. But as we do that, here's a quick programming note. We at ET Now are conducting a mega poll amid the Lok Sabha elections on what the verdict could mean for the markets and how CIOs and market participants are positioning their portfolios. And you can also be a part of this survey. Just log on to our X or Twitter handle, follow ET Now Live and cast your vote on today's question, which is, will the markets peak post-election verdict for the year? Back with closing trades right here in ET Now, and closing trades haven't really moved anywhere. We're still about in that very narrow 100-odd point band. A bit of a pickup, but not really anything meaningful so far, at least. About 65-odd points of an uptick is where we are sitting at for the index. L&T holding out well, ITC ahead of its numbers, looking okay. Unilever is holding out well. But like we were pointing out earlier, the biggest contribution today in trade on the index is definitely coming in from Reliance, which is notching up almost 2% off again. Pharmaceuticals is the one which is not looking bad. Cipla is on a tear, 3% of an uptick there. DRL is looking smart, and that also holding up 1.6% as we speak right now. In fact, Andrew, just wanted to get you in here about, this pharma revival which is currently at play. Many stocks have already moved up, case in point being a DRL or for that matter Cipla. We think there are bound to be, it's bound to be a more sustainable move and will last longer.
Yeah, I think we've kind of hit bottom some months back for the whole sector, and I think the prospects are starting to look better, not just locally but overseas as well. So I think that's been the good news. The results season has not been, it's not been fantastic, but it's not been a disaster. So I think the narrative coming out of these companies are that things are slowly starting to improve going forward. And of course, you know, if you want a bit of safety, you know, in these markets, given the volatility, then you know, the whole of the kind of pharma and FMCG pack have come into play, right, in terms of just a bit of safety, where, you know, some of the earnings have kind of reached towards the bottom, and you can see a bit of light at the end of the tunnel going forward. So I think that's the reason. And obviously, you know, there's been a few QIPs and block trades, which again have got the momentum going for some of these share prices from where they were before.
Point taken. So that's a view on pharma. But since we are on the subject, let me bring on board Shrishti as well to talk to us about what the expectations are. The numbers could be announced anytime over the course of next 1 hour. Shrishti, but tell us what's the street expecting, because Taro was a decent set. So more chances of a surprise there?
So we're expecting a decent set from Sun Pharma, because though on a sequential basis we are not expecting a significant jump, but on a YY basis there could be a double-digit growth for Sun Pharma, and all eyes will be on the US sales this time around, because for US we're expecting a growth of 16% on a YY basis, and we are expecting the number close to be $500 million, and the push could once again come from the specialty sales portfolio, and the key to watch will be the contribution from the GREV limit as well. But apart from that, in the domestic business, we are expecting a growth of 10% on a YY basis, and actually factoring in all of these into the numbers, we are expecting a revenue close to 12,522 crores. The EBITDA is expected at 3,240 crores, while the margins expected at 25.9%. And lastly, onto the profit figure, though on a sequential basis there could be just a flatter sort of a growth, but on a YY basis a 31% jump onto the profit of the company is what we are expecting at 2,602 crores. But apart from the numbers, the key to watch will be the management commentary and the update on remediation of the Halol and the Maholi sites. Other than that, the outlook on their R&D spending as well. So, and how are they seeing the outlook for the specialty sales, not just in US but in the rest of the markets as well. So all of this we will be eyeing on the management commentary, but this time a decent set expected from Sun Pharma. The US sales as well as the margins are key to watch.
Okay, so that's the expectation from Sun Pharma. The other space which is buzzing around is these general insurance companies somehow. So GIC is up 10%, New India Assurance is trading with a 7% gain. Not really sure if there are decent amount of volumes there or if there's anything backing that. But nonetheless, these stocks are active. Kunal, the other pocket which is doing quite well is the FMCG one, right? Right from an HUL, ITC ahead of its numbers, Imami which was up 5%. Anything that you would want to call a strength in the charts of?
So three charts which are looking attractive. Britannia, I think, has come back towards a fresh high. So that's an attractive name to look at, especially in terms of trading, because we're looking at a potential 5% to 7% swing, which could be decent for these FMCG names, which traditionally move into high periods of consolidation and less periods of trends. Even HUL, for example, that stock has been starting to look very attractive. So it's completed a classic pennant formation on the daily charts, rising up above the 50-day moving average, which was actually a resistance for the stock for the last 2-3 months of the price correction. And I think in that time span it corrected by more than 350-400 points from 2550 mark to almost 2100 level. So I think with this change of behavior and the change of trend for HUL, that could be an attractive proposition to look out for in a short-term play. ITC, I would still be a bit circumspect, because the stock still has this odd tendency of trying to or the rally halting around this strong psychological mark. 450 still seems to be a major resistance for ITC. So bullish on the stock on the positional play, but as a medium term or short term trade, I would probably wait out for that breakout confirmation above 450 and then go long on ITC.
Okay, the other one which is in focus is also going to be Vodafone Idea. That 50% anchor lock-in opens this weekend, and that stock hasn't really gone anywhere today, just mildly soft around that 1350 odd point. And the other one that I want to pick up is Paytm. Yes, poor numbers, but the stock didn't collapse pretty much. In fact, it's now in the green, holding up 5% as we speak right now. Much of the damage is already behind it, perhaps. Andrew, I don't know if you've been tracking these two stories, both Vodafone and Paytm, and whether there is a disbelief to belief story or trade here at play.
I think for the telecom sector, we're all going to wait till. I mean, I think it's well known. We're all waiting till after the elections for the first tariff increase, and that will obviously, keep the momentum for the sector going forward. But it's not just that one tariff increase. Is the potential for more going forward? I think there probably is. But like anything, there was always an overhang in stock on Vodafone, and now you still have it. As you said, there's some of the anchor investors, may want to dispose or not. So that will keep a dampener on the stock in the short term until after the elections and the tariff increase, and of course what the government might do with their holdings as well going forward. I think on Paytm, I haven't looked at the results, to be fair, and I think there's still that regulatory overhang. So I think they're just going to wait till I see how all that plays out when the RBI kind of gives its its kind of go ahead to move forward. I'm just happy to wait for those kind of things to play out on this stock.
Rush to buy Paytm as yet. Let's wait for the regulatory overhang to really get cleared before taking any bets. Thanks, Andrew, for joining us today. Appreciate your time. But in the meantime, let me take it across to Naresh as well. Naresh, before I ask you your closing trade ideas, give me your view on the real estate space. Lodha is up a good 5%. Phoenix is bouncing back after that result reaction. Sobha has been doing quite okay. What within real estate would you buy?
So would be looking at Lodha, which has given a fresh breakout today. That's very close to upside of another 10-15% in the near term. Then maybe Indiabulls Real Estate, which has made a good enough base now. After the money raise, etc., the stock went up to 140 odd levels. Did a retest of the same prices of 115, 120, and now has started making a comeback. So that would be one of the top picks going forward, positively biased on the stock here. Looking at that one to do well, and once it crosses 145, it should get into a much bigger trend. So the mid-cap basket, small-cap basket still looks interesting on the real estate side. So something like a Colte Patil, which has not gone anywhere and has made multiple tops around 550, 570. If that breaks out, that could be interesting. So from the large cap real estate, it could be time for the small cap real estate to do well.
Okay, small cap real estate, time for them to kind of come into the flavor as well. But what's the closing trade idea? Kunal, you go first.
So I'll go with HUL. I think trading at 2350 now for the stock itself on a spot level. So it looks very attractive. Would look out for targets at least in the range of 150 to 200 points over the near term.
Okay, TV is actually reporting its numbers and there's a sharp spike on that one. It seems like that the profitability has jumped up 15% and even the margins actually have been similar. Our margin is 1.5 versus 1.7. So margin has not really improved, but the profitability has improved purely on account of the jump coming in revenue. So 20% year-on-year growth. The number has come in closer to 2,432 crores and there's a vertical move on that one. Naresh, before you give me a closing trade idea, just give me a view on TeamLease as well and then your closing trades.
So this has been a stock which has finally started turning around after having a correction of almost 50% from the top. For the last few months, it had a top around 3350, 3400. So till the time it holds about 3250, that would be a stop loss. On the upside, 3500 crossing gives a target price of 4000. So looks like a buy post the result reaction right now.
We'll take a very quick break while TeamLease is still absorbing those numbers with that 20% uptick in revenue and PAT growth as well. But here's the programming note. We at ET Now are conducting a mega poll amid the Lok Sabha elections on what the verdict could mean for the markets, how CIOs and market participants are positioning their portfolios. And you can be part of this survey as well. Just log on to our Twitter or X account and follow ET Now Live and cast your vote today.
Well, the texture of the market continues to be the same. So Nifty is just around the 22,580 mark, still a 370-point drop on the bank Nifty, and the broader markets continue to be a bit mixed. Having said that, Cipla is one stock which is actually trending higher, 2.8%, while Sun Pharma ahead of its earnings is taking a bit of a knock. In fact, it's a top loser on the index right now. So Sun Pharma is definitely going a bit weak into the earnings. But one sector which is been outperforming today's FMCG. So whether it's HUL, it's Tata Consumers, ITC, Imami, all of them are holding up in the green. Let me toss it to Gurmeet to get a sense from him as to what's causing this excitement within FMCG. Gurmeet, hi, good to be speaking with you. Yes, the commentary from most of the managements have been pointing to a rural recovery, but would you buy the argument and buy afresh in these FMCG names?
So it's a combination of commentary being good. It's a combination of I think elections also play a role because especially in the rural economy, the spending picks up. It's a bit of a form of mini stimulus. In fact, there's a very interesting report which talks of that there's actually some bit of labor shortage in industrial states like Maharashtra, Gujarat, Tamil Nadu, as people go back to rural areas and during election time and there is election related spending which actually leads to some bit of reflection in the rural sales as well, reflecting in FMCG numbers as well. Also, there's a bit of a defensive move. Whenever you have an event risk approaching you, FMCG and pharma are ideal defensive places to, take shelter especially when you have made a very good return last 1 year. In fact, if you had a multi-cap portfolio with, let's say, 50 large cap, 50 mid and small cap, you would be around 40-45% kind of a return last 1 year. So I think it's a combination of all those, but you got to be a little more selective, as I said, because the valuations are rich. None of the FMCG names are less than 50, 60 times. So if they fail to deliver on double-digit volume growth and margin expansion, margins also you have to be a little careful because a lot of the profit growth has come from realizations and not as much as from volume. So got to be a little selective. We are more keen on adding the likes of ITC, Tata Consumer, in the portfolio in that space.
Okay, so clearly those are the recommendations within the within the FMCG vertical that you like at this point of time. In terms of the other big movers, infrastructure and the stocks like PNC Infrastructure, HG Infrastructure, which have managed to back fresh orders, these are the ones which are up anywhere between 10 to 15%, and IRB Infrastructure too is up around 6%, and KNR Constructions up 5%. These names, Gurmeet, haven't done too much because these smaller infra companies, people had become a bit averse to that. Has the view changed? And if yes, which are the names within those smaller and mid-cap infrastructure stocks that you would like to bet on?
One issue with most EPC construction names is the working capital cycle and margins because the projects are long gestation. You don't know what commodity prices would behave. And people have some memories of 2003 to 8 when there was euphoria and followed by a 10-year. In fact, even if you see L&T, there was some pressure on margins. And it was obviously a combination of Hyderabad Metro ridership issue also. But their working capital and margins were slightly less than what the company guided for. There's no problem as far as what the order book and prospect books goes. The tender book, which they call, which look very very strong despite elections because there's some slowdown there. So I think if you do a bit of a combination of let's say EPC names like L&T, if you look at some of the energy names like Power Grid, with the kind of we almost have 3 lakh crores of transmission line which India needs for both the interstate grid connectivity as well as the solar panel project Power Grid has more than 60% market share, trades at about 16, 17 times. The issue with a lot of these EPC and construction names is they're trading at 20, 25 times EV EBITDA, very high P multiples. Even somebody like an ABB Siemens, they trade at what 60, 70 times. Very difficult to make money if you enter at these valuations. But if you get some corrections and if you're more in for the long term, maybe the answer could be yes.
In the meantime, Sun Pharma reacting perhaps to its numbers. Not quite. It's still pretty flat in trade as we speak right now. Although it went in weak into its numbers, the PAT's largely in line at 2654 versus the ET Now poll, which was penciling in about 2600 odd crore rupees for the PAT. So that is what they've delivered so far, awaiting the other numbers. What, of course, is going to be critical is what the US sales are, because we're expecting them to grow about almost 16% to about $500 million odd dollars. The EBITDA has come in at 2985. That, I think, is lower than what we were penciling in because we were pricing in about 3,000 odd crore rupees over there. I'm waiting for the top line and of course the regional breakup if there is any.
Yeah, so the US sales have come in a little lower than expectation. $500 million, as Aisha pointed out, was the expectation. The actual number is $476 million. So it's a growth of around 11% and not really 16% that we are talking about. But the stock is actually doing better. Perhaps it's because of the fact that the gross sales have shown a growth of almost 10%. India formulation has been quite strong with a growth of around 10%. And the margins for Q4 have come in, at least the reported margins, what the company is saying, is 25.3% versus 25.6% that they had seen last year. So there's a bit of a hope there in terms of the overall EBITDA margin picture. The overall emerging market formulation sales have come in at $245 million. So the range of growth across these businesses is between 10 to 11. Whether it's global specialty sales as well, that's come in at $271 million, a growth of around 11%. Dilip Shanghvi says that two of their businesses surpass the US $1 billion mark in annual sales, which is global specialty as well as emerging markets. And they also say the achievement of the critical mass in these key markets is a testimony of what lies ahead for them, and they continue to build a specialty portfolio and invest further to gain scale across businesses. I think other than that, it's more of, in terms of what they have done in the full year, and the R&D spends have managed to come off a bit, if I have it right. The R&D, no, actually they've gone up. So the R&D investment is 900 crores versus 666 crores. So the R&D investment has also gone up. I think a lot of moving parts. We'll perhaps get Shrishti or an analyst to join us to talk to us about how we should really read these numbers, because on the revenue side there's a bit of a miss. The US revenue also is slightly lower than expectation and not seeing any big major beat on the EBITDA as well, but the street is taking it well. In the meantime, Gurmeet, you study Sun Pharma quite closely. What would you make of the numbers?
Optically, whatever little I see on the screen looks in line. I think revenue probably street was probably expecting maybe 500, 600 crores more on the top line. I think what I would be keen on basically looking at three things. One is how's the specialty segment doing? That's one which is driving margin growth and profit growth for Sun Pharma, especially led by the dermatology drugs like Ilumya and Odopso, which are doing well. Some update on Mohali plant because that's got some resolution and probably will start contributing to US sales. And on Revlimid, I think it's just that probably some good news on Revlimid is probably in the price, because if you see Teva, which has also the generic license for the cancer drug, that trades at 6-7 times, versus if you look at Sun Pharma and some of the other names which trade probably much higher. So I want to see what the specialty segment looks like, because that's what, in my view, it's showing about 11% up. I think that's something would probably street would like to take notice. And there is a bit of a drug shortage in US on generics overall. So near term, may not be that much concern, but prices have run up.
And of course, the update on remediation of both Halol as well as the Mohali facilities, that's something also that the street is going to be looking out for. But the stock is a little bit all over the place. It fell down about another 1%, and then from there a little bit of recovery coming in again.
Yeah, I think the research team is pointing out that there's an exceptional loss of 101 crores, which is actually impacting the profitability. I think that might kind of explain a bit as to why we are seeing the volatility in the stock, because people are trying to kind of decode how you should read the numbers, because they're in line when it comes to, let's say, some of the parts of the business, but the optical number on profitability look lower. But I think the fact that there's an exceptional loss of almost 101 crore will kind of negate that factor a bit, because the stock has now moved into the green, again in the red. But Kunal, what's your take on the charts? Is Sun Pharma stock you'd like to bet on? Because very volatile when it comes to the price right now.
You see volatile, but within a very tight range for the stock. But when you look at the last 2 months of chart, it's little done nothing. I think the high the stock had made in the last 1.5 2 months is closer to 1555, 1560 levels, and the lows for the stock is around 1480 mark, which means it's just confined into a range of 4% broadly for itself. So I think that's a very tight kind of a range. Ideally, post results, we expect that the stock breaks past about this very tighter range consolidation, and whichever way the stock breaks past, after 2 consecutive days, that's where I think one should probably try and take a trade. So I think breaking past about 1560 mark could be a trigger point for Sun Pharma, but we'll wait out for that.
And I think what's most impressive now that you're seeing the stock stabilize finally is the R&D update. In fact, let me take it across to Srishti and get in more details beyond the operational numbers, Srishti, because it seems that they're going to be focusing both on specialty as well as the generics business when it comes to their R&D spends.
Yes, Aisha, that was the key to watch when it comes to the Sun Pharma earnings, because the US sales as well as how did the company did perform in the global specialty sales, those were the numbers that we were tracking. But on the operational front, yes, there has been a disappointment onto the EBITDA margin as well as revenue figure, though the profit has come in line. There has been an exceptional loss of 101 crores is what the company has reported, over 100 crores for this time around, and that's related to some of the impairment charges. But factoring to that, the profit figure has come in over 2,700 crores, and that's a little above than what we were expecting at ET now. But talking about the internals, then the US sales has disappointed a bit, because we were expecting the number close to $500 million, but 460, close to that particular number, $476 million is what the company has reported. And even the global specialty sales did account for 19.1%, while the India sales has come in line to what we were expecting. A 10% growth is what we were expecting for the Sun Pharma India formulation sales, and that is what the company has come out with. What is interesting to see that this time around, the company's management commentary does say that during FY24, the two of their businesses has surpassed the $1 billion in annual sales, namely the global specialty and emerging markets, and the achievement of the critical mass in the key segment is a testimony of the several years of hard work. But other than that, there's been no specific commentary related to the outlook of the global specialty sales, which we generally get to see in the management commentary of Sun Pharma. So as of now, nothing much to read, but the numbers are not that much disappointing, because factoring in with the exceptional loss, the profit has come in a little higher. So I would say it's a mixed set of numbers, but we will wait out for more details from the management commentary.
We'll wait out for that management commentary, but thanks so much, Srishti, for helping us understand as to how we should read the numbers, because clearly a lot of moving parts there, and the stock too is trying to decode that, a bit of a flip-flop. But what else is happening in the market? Because while we are waiting for numbers from Nykaa as well, ITC will come out with earnings tomorrow. In the meantime, there are some other stocks as well which are buzzing around. You have Gravita India, JBM Auto. Some of these names continue to do well. In fact, since we are talking about auto as well, what's the view there, Gurmeet? Because two-wheelers were coming back, and this goes back to the point that you were making on rural recovery and the monsoons as well. In that context, should one buy some of these auto two-wheelers as well?
You see the total volumes, Anisha, we probably this year will also be lesser than a pre-COVID. I think 2019 we did like 2.4 crore units. I think this year probably ending year would be 2.2, 2.25. Not too sure on the exact number. So the actual volume growth hasn't been very static. And if you compare this with China, today probably they sell the same number of cars and two-wheelers. So I think as per capita picks up, it's the car which tends to do well. But there is some valuation comfort in the likes of Hero. There could be some movement because there's a lot of cash on Bajaj Auto. There are buybacks related news, and then the near term there could be some support because valuations are still not very stretched as far as Hero and Bajaj go. We are more keen on the ancillary part of it. We have somebody like a Sandhar Technology where the two-wheeler, four-wheeler mix is about 45-55. They are into locks. They make frames for motorcycles. They also make cabins for trucks, etc. And we also look at something like Uno Minda, which also is doing pretty well. Again, the mix is 60-40 in favor of cars. But we are more focused on the SUV side and the premiumization of the car and the movement towards hybrid and EV. And I think that's where you'd probably see slightly more higher gains. And there we're very, very constructive on likes of Tamo and M&M. M&M also now is almost inching back to 20% market share in the SUV space. More models, more launches coming up. And Tata Motors has seen some correction after the good numbers, but slightly subdued commentary on GEL. So that's something we like more within the auto space.
Right, okay, that's the take coming in on where is it that you see opportunity within the auto pack. But Gurmeet, before we wind down on the show, wanted to understand what your pre-election strategy is also. Do nothing? Are you confident of the government winning the numbers that the market wants?
You have to work with probabilities in equity markets. I think the probability is high, but as they say in cricket and elections, till the last vote or the last ball is bowled, you should not try and take positions. I think something which is not in your control, you should not really try and worry too much about it. I agree it's a large event, and I think if you see the FI position, they are also very light. They've sold almost more than $4 billion this month itself. Their ownership is down to 16% from 22, 23% few years back. On net contracts, they are like almost what I think my colleagues on the panel can tell you better, more than 2 lakh contracts short. So the positioning is light, and I think you can't take an extreme call or either going all in or allowed. So our strategy has been buying on dips. Our strategy has been looking at things where there is valuation comfort, where there is little bit, be a little more contra-cyclical in names which have seen some corrections. And more importantly, temper down return expectations. Our earnings growth with rates being high would be more like 13, 14%. Market already trades at 20 times. So you'll not have last 2 year kind of returns. So if you temper it down, the risk side of it, and then obviously I think you will take better decisions. So have more reasonable expectations. And as I said earlier, bonds also look very juicy. The 10-year is already down to 7.07 from 720. You could possibly see 6 and 6.5 on the 10-year next year, which means on duration also you can make double-digit returns. So be more balanced and be more sober in terms of your expectations.
Like the Delhi weather, right, Gurmeet? 47 degrees already. How is it that you're coping up?
Oh, it's horrible. It's horrible in Delhi. And horrible is a milder word. So all outdoor is off. And we're looking at some of the AC names. Huge shortage for air conditioners. Huge, and maybe some of the beverage names. Aisha, that's. I mean, consuming it and buying it both problem.
Imagine, but I hope that doesn't stop Delhiites to go out and cast their vote, though. But Paytm, look at that, a 7% recovery coming in from the session lows. Poor earnings, but much of the damage, or rather, so much of the damage was already behind on Paytm. 368 is where that stock is right now. So that's a sizable recovery from the session lows that you've seen. It started off with a gap up, and from there has made a decent move. Anisha, you wanted to address something on Paytm?
Yeah, so brokerages like Bernstein and Morgan Stanley have said that, perhaps the end of that worst cycle is in front of us, and there's recovery which is expected from Q1 onwards. In fact, Bernstein highlights that Paytm's gross merchandise value in April reached approximately 81% of the January level already, signaling a positive momentum and improvement from recent lows. Morgan Stanley also noted a moderation in the GMV growth quarter on quarter, but the year-on-year increase is something which was quite okay. The analysts are talking about how perhaps the recovery is something that one should watch out for, which is impending from Q1 FY25. So I'm just reading through the notes of Bernstein as well as Morgan Stanley, and both are hopeful of that recovery going forward. So that stock off almost 7% from the lows right now. But let's take it across to Vinny and get a sense as to what the expectations are from Nykaa. Vinny, tell us more.
Absolutely. So we're expecting the numbers anytime now, and overall just the expectations are coming in is that we're expecting a revenue growth of 26%. This is what they had highlighted in their Q4 update, that they would see growth in high 20s. So that's what we're expecting. GMV growth expected in early 30s for overall, so a year-on-year basis when you look at it on a consolidated basis. Fashion business, yes, that could see an improvement coming in. Let's not forget its fashion business is a lower base, so we will see an improvement there, but sequentially maybe a bit of a slowdown in the fashion business because seasonality comes into play in the Q3. BPC business, that's expected, that's the beauty personal care side of Nykaa, that's expected to remain resilient, and that's what we'll watch out for in terms of the commentary that they're saying in terms of demand trends over there. What are they expecting in terms of industry outlook for the fashion in FY25, as well as expectations in terms of break even for the fashion segment, and anything on the expansion fund in the international market are key factors that we should watch out for from Nykaa.
That's about Nykaa, but brief us about ITC as well. Numbers, yes, post-market tomorrow, but headline number, what we should watch out for?
So we should be watching out for the cigarette volume growth. That's expected to be flattish at around 1% is what you could expect. And overall, in terms of the revenue growth, that would be at around 3.9%. Yes, do not forget there may be some pricing growth that will come in this time, but that is going to be key to watch out for. Other than that, we are watching out for in terms of the profits, expected to see a muted growth of around 1%. Overall, what the street is expecting right now, what we are penciling in is a muted show that could come in because the paper and agri business that is expected to be continue to be under pressure. That's what is happening in the last couple of quarters, and that could maybe be the case even this time around. FMCG business, on the other hand, we're expecting FMCG business to see a high single-digit growth in terms of overall the growth over there. While in terms of the EBIT margin, let's watch out for the FMCG EBIT margin, where that is headed. Maybe year-on-year basis, we could see the FMCG EBIT see a bit of a decline, but that's something we are watching out for. Other than that, hotels business expected to see a strong growth that's sustained, given that travel tourism is picking up pace, and hotels business for them has been doing quite well in terms of the strong growth that we've seen in the last year. Secret volume mix over there, new growth vectors for FMCG, as well as the outlook for the paper and agri business are the key factors that we're keeping an eye out on.
Okay, that's the big one. That's both ITC as well as Nykaa, which are anticipated to come out with their numbers. But a bit of a pickup actually for the market. Some of the private banking names have definitely lifted off from the session lows. So while SBI may have cooled off from where it started off, ICICI Bank is seeing a bit of a recovery, and the Nifty as well, by the way, is at the high point of the day. I can say the same about Kotak as well. Perhaps a little bit of a movement coming in for HDFC Bank too. Yeah, Kotak is pretty much around the high point of the day, and that's kind of rubbing off on what the index is doing right now. But Gurmeet, your take on HDFC Bank? One continues to wait for that one day when it's finally going to move, but it's, I guess, tested patience for a very, very long time now.
No, I agree. It's a long wait, and I think ICICI and Axis have taken the leadership as far as the private bank numbers goes. And purely look at operating metrics, look at the NII growth, look at the names, look at the CASA mix. It's actually better than what HDFC has been doing. Obviously, we can't compare on a like basis because of the merger. But HDFC and Kotak used to get 4-5 book value for the industry leasing metrics, and I think that's been matched and done slightly better by ICICI and Axis. I think it might stay there for some more time till HDFC really gets the merger thing fully integrated, and the liquidity ratio as well as the cost of funds sees some bit of tapering off. I think PSUs, I think SBI in my view looks pretty good. I think continues to deliver quarter on quarter. I'm very gung on some of the payment business and other stuff SBI is doing. It's still at about 1.2, 1.3 book value. And if you see some PSUs, Aisha, I've not seen 1% ROA for a very long time in PSU banks, right? And I think if they can sustain that and not just be dependent on treasury gains and other stuff and recovery, but they can sustain ROAs purely on NI and NIM expansion and growth, I think we are due for this one more round of due in terms of they getting re-rated.
So that's a view on PSUs as well as some of the private banks. But interesting move on the index right now. The Nifty is past that level of 22,600, and the bulk of that recovery has actually happened in the last 5 minutes. And that's all attributed to the kind of recovery we are seeing in the private banking names that we were just alluding to. So the Bank Nifty has also moved considerably off the lowest point of the trading session. And that's taken, of course, the Nifty also with it. In terms of the key gainers, it continues to be Reliance, which is adding almost 40 points. HUL, Infosys, ITC are the other top gainers, while the losses have narrowed substantially on ICICI, SBI, Axis. So they are clearly participating. Gurmeet, we'll let you go on that note. But Kunal, a word on the index move that we are seeing right now. How much of it do you think is just on account of the management of the weekly options expiry? And come tomorrow, would you expect this strength in Bank Nifty to continue?
So strength in Nifty should continue for at least the next couple of days. And yes, the expiry move was something which was taking place in the last half an hour or so, because I think almost at just a strike at 3 p.m. we saw the index falling sharply from 47,700 mark towards 47,500, and then immediately in the next 15 minutes or so, the index recovered back towards 47,700 mark and then higher from those levels. So I think it's purely to do with the expiry for the Bank Nifty. But I also believe that the recovery for many of the larger cap names which you're seeing in the last half an hour, last 1 hour also gives a sense that we could probably be seeing the Nifty moving up higher going forward. And I think now we could be looking at 22,500 as a fresh base for the index. And I think that could be a bigger catalyst for the index going forward.
Right, okay. Let's begin winding up for the day. Before that, let's just quickly get in some BTST trades as well. Naresh, what's your list like?
So first is a buy on Tata Steel, looks like a breakout, stop loss at 170, target price of 178. Second is a buy on Granules India, good price volume breakout today, stop loss at 420, target price of 435.
Right. Kunal, what about you?
So I'll go with two mid-cap names. Buy on CIE India, targets of 600 and stop loss could be kept at 500. And Indiabulls Real Estate, could be the other stock, which I would suggest is a buy. Targets of 150, stop loss 121.
Okay, that's the take coming in on some of those closing strategies. Gurmeet, we'll let you go on that note. Kunal, Naresh, we'll see you again with all the trades tomorrow morning. Today we managed a little bit of a pull up, but nothing really meaningful. But we're closing around that 90 odd point gain mark. I think on post adjustment, we'll of course close a lot closer to that 22,600 range. Granules, Brokerage Realty once again has spurted up. This has actually been one of the star performers for the last fortnight or so. 3.6% higher is where it's closing in for the day. There's BEL, PI Industries, and amongst the large caps, it's got to be Reliance and Cipla, which has really done the heavy lifting in today's trading session. And even ITC ahead of its numbers, closing in with that 1.5% in the green kind of move. L&T, not bad, even though it ebbed off a little bit from the highs of the day. Infosys, higher by 1% or so. Coal India, 2% higher. And then Unilever as well, which put on a good 2% in today's trading session. To the pressure points, while of course, some of the private banking names definitely did lift off a little bit. Cases in point being HDFC Bank, ICICI as well as Kotak, but still close in flat on a net basis. In fact, ICICI Bank finally settled lower by almost 1%, and that was pretty much the case with Axis as well. Shriram, Apollo Hospitals, Hindalco, Hero MotoCorp and JSW Steel. So some of the select metal names have definitely seen some profit taking come by. So that's pretty much it for the day. We're going to wind it up right here on this edition of Closing Trades. Thanks very much for watching.